yes, like the way Shrishti said, it's Friday. It's a learning day for all of our viewers. Buy now, sell now, Pathshala. And yes, we have Kunal back for us to take us through the Buy now, sell now, Pathshala. Kunal, all of our viewers have been asking one question every day. Hopefully that question also is answered with you appearing for BNS and Pathshala now.
And absolutely, yes, Cheryl, and it's always great to come back for Pathshala. Now, the topic which I've discussed today is very interesting, and the charts, the second chart specifically, is something which could probably give an insight on how the trends for indices as well as technical patterns shape up. So the topic for today is double bottom formation. Very critical pattern, because when the markets or the asset classes go into a phase of correction, it's very, very essential to understand that how stocks form bottom, how much time they generally take to form a bottom for themselves, and what happens when the rally starts off. So we look at a very primary example of how a double bottom pattern shapes up. Assuming our trend of the stock is going down, so which means during this black line, the stock is actually going into a downward trend. All of a sudden, post a certain level gets breached, the stock forms a bottom for itself, goes into a phase of a rally, and this is a double test of the bottom. So both in terms of the time spent, so the time spent over here is much higher as compared to the time spent at the double bottom, which is a bit shorter as compared to the previous time, and then the stock forms a double bottom more or less at the same levels for itself. The breakout happens, the previous highs get breached for the stock, and then on the retest, the stock retests this neckline to start off a strong confirmation that this becomes a very strong and a solid support in the entire scheme of trend for the stock, and then starts off a very strong uptrend. So we call this as a classical double bottom formation, where the stock forms a double bottom pattern, goes into a breakout, retests the neckline, and then starts off an uptrend. We look at one chart which is already confirmed a double bottom, and the second one is a more recent one, which could probably be a good indication of how trends shape up for an index. So this is the IT index. Over the last 1 to 2 years, we've seen what happened to the IT index from 2021-22 top, where it formed a major correction from almost 38,000, 39,000 levels to a point when it was almost at 27,500 approximately. This is the classic case of a double bottom. The index formed a retest of the previous lows, got into a breakout, and then a retest of the previous neckline breakout for this double bottom formation, and then started off a major massive uptrend. And this is just September 2023 lows for the IT index from 30,000. We are already at 38,000 plus levels for the Nifty IT index. So this is a classical case of how double bottoms shape up. But we look at one more chart which is very recently formed a double bottom pattern, and that's the Bank Nifty. So as you can see, over the last 2 months, the banking index from 49,000 approximately fell down to as much as 44,500, 45,000 levels. A double bottom pattern over here for the banking index, a breakout which we've seen recently, a retest of the neckline. So as you can see, yesterday's low was almost like a retest of the neckline. If you can look at this in the line charts, it'll be much more clearer. And now we are on course of coming back towards a breakout mode for the Bank Nifty. So this could be a classical case where the Bank Nifty could form a double bottom formation, a rally, a retest of the neckline, and then possibly a start of a very strong uptrend.
All right, so that's the learning on the double bottom pattern. Thank you so much for that, Kunal. And like you were highlighting Bank Nifty, just to highlight that the Bank Nifty has now once again come back to the green territory and now holding up gains of almost 150 points.